Hi everybody, welcome to this week's segment of OWA Live. We're continuing our discussion on Social Security. We've had a couple of videos over how to file your Social Security benefit and some of the pitfalls to look out for. Today, we want to talk about Social Security and taxes. Social Security and taxes. I don't have to tell you how passionate I am that we have to pay taxes on Social Security benefits in the first place. It bothers me to no end that we pay tax on a benefit that's already been taxed, but that's not what we're here to discuss today. Your Social Security benefit may be getting taxed. They use what's called the provisional income scale. Your provisional income scale is not like adjusted gross income. It's a little bit different. There are some things that they take out. There's some things that they add back in. So provisional income will look at your adjusted gross income, but they subtract out your Social Security benefit. So adjusted gross income, not including anything that you're getting from Social Security. They do add back half of your Social Security benefit. Whatever your annualized Social Security amount is, that's added back in. Half of that is added back into your adjusted gross income. Then they add in something called non-taxable interest. What the heck is non-taxable interest? Well, this is the coupon payment that you get from a municipal bond. Those munis that were peddled as tax-free investments actually go against the tax of your Social Security. A lot of people that are holding munis don't know that. And what's worse is a lot of financial advisors that are recommending munis don't know that. We make it a general rule, Social Security and munis do not mix. If you are holding municipal bonds, you probably shouldn't file for Social Security. If you are collecting Social Security, you probably shouldn't be holding your muni bonds anymore. You should be getting out of those positions. So they take all of this stuff. They look at adjusted gross income, not including Social Security, half of your Social Security added back into that, these non-taxable interest municipals. That gives us a total. That's your provisional income. Now, the federal government is known to make things very complicated. So they say, if your number married filing jointly is over 44,000, or if you're single, it's over 32,000, then 85% of your Social Security is taxed. It's not that it's taxed at 85%, it's just that 85% of it gets brought back into your adjusted gross, taxed like normal. If you can get this number between 32,000 and 44,000, and if you can get this number between 25,000 and 32,000, then only 50% of your Social Security is considered taxable income. Only half of your Social Security gets added back into your adjusted gross. And then finally, here's the key. If we can get this number below $32,000 or below $25,000 for single individuals, guess what? You do not pay tax on your Social Security. That's a pretty sweet deal. A lot of people don't even realize. They may know that they pay taxes on Social Security, but they may not realize that there's a way that they can get around it. There's a way that they can avoid it. You have to get your provisional income low. So I'm going to go back to this here. How in the world can we reduce our provisional income? Well, there's not a whole lot that you can do to reduce your Social Security. That's pretty well fixed. That money that you get is going to be a part of the equation regardless. Do we have any non-taxable interest? If we're holding any munis and we're collecting Social Security, maybe we should get rid of those positions or put them somewhere where they're not going to show up here. What can we do to reduce our adjusted gross income? One common strategy that we'll recommend is if you have traditional IRAs, all of those traditional IRAs are taxable and added to your adjusted gross. Let's look at converting those to a Roth. Guess what doesn't show up on your AGI? Roth distributions. So if you have $100,000 a year being pulled out of Roth, none of that shows up here. Half of your Social Security, we don't have any non-taxable interest. Well, guess what? Not only are we saving taxes on the conversion amounts, we're also going to be saving taxes on our Social Security. If you want to dive deeper into this strategy specifically for yourself, make sure that you've got a financial advisor who understands Social Security. Give us a call. Come in and we can review your Social Security strategy and give you recommendations to reduce the taxes that you pay on Social Security across the board. Get yourself a good financial strategy. Make sure that you know what you're doing specific to Social Security. All right, that's it for today. Thank you for joining us with this OWA Live, and we'll see you next week.